Good afternoon from the floor of the CME. This is Chris Robinson with your Traders Exclusive comment today for Wednesday, the 14th of December. It is Fed Day. As I speak to you, the Fed still has not made an announcement. They will later on today. While the whole rest of the world is watching the 10 years and whether or not the Dow can get the 20,000 print, we're going to focus on some different markets today: corn, wheat, beans, cattle, and there's some opportunities there given the type of action that we've had. Number one, you've got to look at where the funds lie. They're long about 120,000 contracts of soybeans. They're betting it's going to go higher. Against that, they've got a spread. They're short wheat and corn. They're short about 140,000 contracts of wheat and about 80,000 contracts of corn. Earlier in the week, we thought that there may be some wheat kill because of the cold temperatures and lack of snow cover. That little bit of a bump has been once again taken away. We have not had any follow through really higher. Corn was able to eke out a 1 month high yesterday, but really what we've got is the grains are in a trading range, and we may not break out of them until after January 12th. We have a big USDA report. So when you get in these trading ranges, you have to be very, very careful about getting too excited when it looks like it's going to break out, and also getting too negative when it looks like it's about to make new lows. So we may be in this range for a while. Perfect scenario, look at January soybeans. It looks like we were ready to go higher. We were pushing up against resistance, and then lo and behold, we fall back again. January beans have been in a 30-cent, 30-day trading range. It can be very difficult to trade this market in December, so I would caution you about getting too caught up and either getting too bullish or too bearish. I think we may have to wait and see if anything happens with South American weather, or if the USDA gives us any surprises in January 12th. So between now and then, it's going to be probably dicey trade in the grains. I want to switch over real quick to cattle. Cattle has had a $20 rally off contract lows. We're at 3 and 4 month highs, depending on if you're looking at feeders or fats. That's a great opportunity either for a speculator or a hedger to step inside and maybe look for a counter trend or to set a hedge in case we were to get a contraction. The managed funds have made a very large bet being long cattle, about 70,000 contracts of fat cattle. That's something you want to keep your eye on because it's kind of like surfing. You want to be with the big wave when it's going, but just like out in Hawaii, when those waves break, it can be very frightening. So you got to watch that money flow, the position of the every Friday we get a commitment to traders, and you can see where the managed money is. And being long 70,000 contracts of cattle, they're betting on a continued move higher. So that's a trade that I think presents good opportunity. Lastly, but not leastly, a very thinly, not well funded, well followed market is milk. Believe it or not, milk is at 2-year highs. It's something you might want to take a look at if you're looking for a little bit different type of strategy. It's a longer term strategy. Sometimes the markets there can be very, very thin, but when you get to multi-year highs like that, sometimes it's an opportunity either to try and go look for a continuation higher, or again, you step in and look to try and catch a move back in case there's a retracement. So those are the things I'd be looking at. Aside from obviously what a lot of people focus on, which right now they're looking at stock indexes, the 10-year, and so on and so forth. So a little bit more of a niche type market, something you might want to take a look at. If you're looking for help with your speculating or with your marketing, if you're a producer, look me up on the web, Chris Robinson. Be happy to help.